Foundation. My name is Rose Yusuf Kaiser, and now me will be una host this evening. As usual, now, if you don't dey join us from the previous ones, now me they carry on our car. So yes, just follow me gradually as we go through this women engagement series for the month of October. I'm super excited because this particular one, it go hot well. All right, now if you're joining us for the very first time, maybe on radio because we're live on radio, or you are in the Google Meets with us. Well, this is the Women Engagement Series by Women Radio Network, and this is where we get to connect. This is where we get to inspire and empower you. All right, our cherished listeners and members of the Women Radio Network. Now, each month we bring together women from diverse backgrounds to share insight, experiences on different topics that matter the most. Are we looking at from health to finance, to business, to relationship? Just think about them. In fact, even make even rich person safe. We they talk about them for all of this engagement series way we they do. Now, this series is actually designed to keep you informed, to keep you inspired, and to engage you, all right, as we continue to amplify the voices of women and drive meaningful conversations that shape our future. All right, so yes, that's what we're doing here with the engagement series. Now, this month engagement series, that's the October engagement series, is titled How the 2025 Tax Reforms Affect Nigerian Women. All right. I know say you don't hear about the tax reform, and plenty of questions go they run through your mind. Tax reforms, all this one where government they talk, which kind of wahala be all this one they don't they bring come. Me will be market woman. What it concern me? Me when I petty trading that they do. Me when I be na inside office I they work, or maybe me will be stay at home mom self. How all this one will take affect me, but don't worry, just calm down, okay? Just calm down. Now the tax reforms we have been hearing about in the news, on social media, gets to affect every aspect of our lives, from the prices we pay to the businesses we run and even the jobs that we get to create. But what do these changes really mean for women? Yes. How it take affect us as women. I mean, you go think say, no, come near me since I know they go work, I know they do this one, but my dear, you dey enter market. My dear, you they buy one or two things, you they do something. At least, wherever you go to share, you they shall spend money, and that one you feel no say they affect your way the other, but no worry, just calm down. All right, and also for all these things you they really reason them. But how will all of this get to impact female entrepreneurs, working women, household women across Nigeria? But today, like this, all of this plenty talk, we go break and down. Don't worry, we're going to break all of this down. All right, the 2025 tax reforms in simple terms. We're going to break it down so that you, wherever you are, whether you sabi English, you don't sabi English, or whether you go school, you don't go school, we go try and make it so that you, wherever you are, you go understand them. Sure, you go understand everything. So this is just to help you understand what's new, what's changing, and how you can position yourself to benefit from these reforms. All right, so yes, don't forget we're also live on radio. So if you're joining me on radio, we truly appreciate you. Women Radio 91.7. If you have questions while you're listening, please do well to send the questions to our WhatsApp number, which is 070-317-56537, or 08155917917. WhatsApp messages are welcome. Text messages are also welcome. Okay, we'd definitely love to hear from you this evening as regards to tax reforms and how it affects women. All right, so let's go ahead and get on with some housekeeping rules. Let's go ahead and get on with some housekeeping rules. Now, before we begin, let's just, say sometimes rules good at being here so that we could just guide ourselves through this webinar and quietly, and so that we can hear everything that we're supposed to hear. Now, first of all, mute yourselves, or I think we have that covered already, unless you're called upon to speak. Secondly, drop your questions in the chat box, okay? So as you're listening, whether you're joining us on the link or even through radio, for radio, you can send in WhatsApp messages or text messages. But if you are on the Google Meet with us, please do well to drop your questions on the chat box, okay? We will definitely get to take them because there is a session for and the Q&A. So we're going to take them during that time. As you're listening, questions pop up, please do what to drop your questions. If you're listening on radio, like I said, send in your questions via WhatsApp or text message, like I mentioned earlier, please do so. And when you're dropping your questions or any form of interaction, please kindly be respectful in your comments and your interactions. And please, don't on video. Just keep your camera off, okay? Just keep your camera off, especially when you know that you're not camera ready. Just do that for us, okay? All right, so I hope that you understand all what I've said and we're going to abide by it. All right, so now that we have that out of our way, let's get down to the main business of the day, because I know say no be only me they each to hear how these tax reforms affect Nigerian women. So yes, so make we go down to the business of the day. All right, now our distinguished guest today. If you don't see the flyer, I know say you go down. They say yes. So this one go really hot this evening. Maybe we can't hear waiting day inside this tax reform. And who else could do this one for us? If not the person with the inside the matter, this person with the inside the matter himself. So we're going to hear directly from Mr. Michael Olufemi Olarinde. He is the head of the Fiscal and Tax Reforms Division at the Federal Inland Revenue Service (FRS), and he's a special advisor on tax policy to the executive chairman. Now, just to know a little bit about Mr. Michael Olufemi Olarinde, he's a chartered accountant, he's a chartered tax associate and chartered HR professional with over 20 years of experience in tax policy, legislation, and administration. He also serves as Nigeria's country correspondent to the Commonwealth Association of Tax Administration, a member of the UN Subcommittee on Health Taxes, and he sits on the Presidential Fiscal Policy and Tax Reforms Implementation Committee, and alumnus of the University of Oxford and the Commonwealth Senior Leadership Program. He has presented papers at over 20 international tax conferences. So you see, say we carry person we hold where we carry our comma be. So yes, so make you sit down, relax, carry biro and paper. Let's unpack all of this so that you have a better understanding and you are making decisions from an informed place. Okay. So yeah, let's go ahead and learn here and be ready to spread the word how the 2025 tax reforms affect Nigerian women. So with a virtual welcome, listening to me on radio or via the link, please give a virtual welcome to Mr. Michael Olufemi Olarinde. So, Mr. Michael Olufemi, the floor is yours. Please go ahead.
Okay, thank you very much for having me this afternoon, this evening already. I'm delighted to be here, to be among the women and the men alike that have joined this call. Like has been said, I'll dive straight to the meat of the day. And I will share my screen to make my presentation. I don't know if I've been given the access to do that. Okay, I think I have access. Okay. Hold on, I will be. Okay. So, like it has been said, the tax reform is one of the most transformative reforms in a very long time in Nigeria. Let me know if you see my screen. So can you see my screen?
Yes, we can see your screen. See your screen.
Okay, I'm trying to put it on presentation mode. So, okay, I'm just trying to see if I can put it on presentation mode. Okay, can you see it on presentation mode? It's not full screen.
Yes, not yet, sir. But I guess we can go ahead to save time.
Okay, thank you very much. So, women in Nigeria And thank you very much. My presentation is on Nigerian Tax Reforms Act 2025, how it affects Nigerian women. So I'll say women in Nigeria, uh, sorry, women in Nigeria and the informal sector reality. So it's been said that over, I need to, I think I missed something first. Okay, that's fine. Okay, it's been said that over 60% of our GDP is from informal sector. And it said that this 60% constitute about 93% employment share in Nigeria. And majority of this are women traders. So it means that the women in our nation constitute a lot to our economic development. And Nigeria's informal sector contributes about 60%, like I said. And so most women entrepreneurs operate in the unregistered informal markets. And these challenges include limited access to credit, digital barriers, safety concern, domestic responsibility. Whereas tax policies often overlook these gender-specific issues too. So we now have a transformative journey, which led to, on June 26, President Bola Ahmed Tinubu signed 4 transformation tax bills into law, effective from 1st January 2026. This landmark unifies Nigerian tax acts and consolidates over 50 fragmented tax laws into one coherent framework, eliminating redundancy and confusion. And so the scope of the work includes a comprehensive review which involves redrafting of all our tax laws and related legislation. It also simplifies compliance for all taxpayers and to provide clarity and coherence so that and effectiveness of our tax laws. So some of these tax laws have been in existence since 1939, as far back as 1939. And imagine we using a law of 1939 when everything was so manual to now be collecting taxes in this day and age. So that's now what were the core principles of this tax reform? One, simplicity. That was the first one. It said our tax system cannot be this complex and expect everyone to comply. Many people are not complying because they actually don't know how to. So can we simplify the system so that everyone understands it? Also, they said there are a lot of fragmented laws and fragmented taxes. Everybody collecting taxes from left to right, across the federal government, across the state government, even to local government. Can we put all these tax laws to one so that we can all understand who is to collect what and at what time this tax is supposed to be paid? You must say this reform we are doing, please, let's focus only on taxpayers. Don't think about government revenue for now, because when taxpayers are focused on, you give them reforms that aid their businesses, they will naturally expand. That means, and they will pay tax because it makes it easy for them. Then also, can we use figures to determine, make every decision we are making? So say let's be data-driven policies. So if you want to say 5,000 people, want to say people earning a certain income should not pay taxes, then there should be a standard, there should be a computation you have done. Then we say our tax administration should be modern. We should not be seeing people on the road blocking the road with sticks and nails to collect taxes. And the tax administrators sit down in their office and collect taxes. So modern tax administration. So these days people are using AI. So why are we still running after taxpayers when you can look for their transactions digitally and see how you can get the taxes they're due? And can you make Nigerian business environment competitive by ensuring that people can easily do business in this tax system? Can we ensure that our taxes are neutral on business? That people do not pay tax even when they do not make profits. So tax should be a consequence of productivity, consequence of profitability, not consequence of just doing business. Not because people are doing business, they should pay tax. They should pay tax when they are prospering. So government now said, okay, we have a policy that we want to tax only the fruits. So please, if you plant a seed today, the seed must germinate, not just germinate alone, it must produce fruits before we should tax them. So we say we want to tax the fruit and not the seed. And also, we want to tax prosperity and not poverty. So for people who are poor, please, let's leave them alone. By people who the economy are favor, like they say, the fingers are not equal. For those taller fingers, can we ask them to pay some to be able to grow the shorter ones? So also, can we come? We are no longer in the, we are not an island. Nigeria belongs to an economy of nation, community of nation, committee of nation rather. And so, can we also be dealing in line with global practices? So, these are some of the principles. And what do we have? We have 4 laws. Today, we have several laws, and we now have been cascaded into 4 laws. And basically, all these laws are majorly 2. We have the Nigerian Tax Act, which is the law imposing taxes in Nigeria. So if you know companies income tax before, personal income tax, value added tax, petroleum profit tax, capital gains tax, stamp duty, all of them now have been put together in one law. So the power to impose taxes, to tell you what to charge, how much you are being charged, and all of them is now in Nigerian Tax Act. Now we have a law called the Nigerian Tax Administration Act, which provides for governing rules for tax administrators in Nigeria. How do you conduct yourself? How do you collect taxes? What happens if a person doesn't pay? What are the consequences of not paying? So these rules are in the Nigerian Tax Administration Act. Now we have what we call the Nigerian Revenue Service Establishment Act. It's just changing the name of FIRS from FIRS to Nigerian Revenue Service. And this is to ensure that the mandate of FIRS is gotten clearly, because the mandate is to collect tax on behalf of the government of the federation and not just federal government. What this means is that taxes FIRS collect belongs to the federal, state, and local government, and not just only federal government. So if it belongs to the 3 of them, then FIRS represent Nigeria and not the federal government. So the need for it. Also, the Joint Revenue Board Establishment Act. We used to have the JTB today, Joint Tax Board, which is under the Personal Income Tax Act. So we say we need to make them independent so that they can oversee all classes of tax administration. And they can provide simple standards that every tax administration can follow. They can also provide common services. So if a tax administration needs to develop a portal, needs to develop a guideline, needs to develop some rules, why can't they provide those rules so that it will be uniform across board instead of every state providing their own, and so it becomes distorted. The next thing, let's go straight to what have changed in the law. Now companies in the law are now reclassified as small companies and large companies. Companies today, small companies today are companies with 25 million turnover and below. Whereas in the new law, a small company are now being graduated to 100 million. And what is the consequence for being a small company? A small company today is exempted from paying taxes, which is 25 million and below. Then going forward, a small company which is now 100 million will pay tax at 0%. That means it has nothing to pay. It has nothing to pay. So a company, a business that is 100 million and below turnover will pay 0 tax. While large companies that have turnover of over 100 million will pay tax at 30%. Now, government is also planning that when the economy stabilizes, the president can, through his power, now reduce this tax to 25%. And also another thing, we have something they call earmark taxes. They call it NIDA levy, education tax, Naseni levy, and many other levies they charge on companies. Now the law has now merged all of them together, and now at the rate of 4%. Before today, if you pay individually, individual taxes of this earmark taxes, you may be paying almost 6%. But now merging them together and reducing the rate so that businesses can breathe, so that they can have enough profit. Because that when businesses make profit, they will want to expand, and in expansion they will employ, or they will develop the economy, they will develop the environment where they are. So or they will spend. So those things, when they spend too, it affects the people in the environment. Also today, there is minimum tax. When people make loss or they do not have profit to declare, they pay tax called minimum tax. Government.
Here we go. 3, 2, 1.
I don't wanna wait for nobody.
Keep it locked.
I should have bought you flowers.
Turn your radio up.
Held your hand.
We are WFM 91.7.
I am Malario, the king of malaria parasites. My mission is simple: to take over your body, to cause fever, chills, headache. But one thing stands in my way. Come on.
Effective relief from malaria. Comal on, malaria gone. If symptoms persist after 3 days, consult doctor.
Where are all the women? Because Hangout with Tea Ladies event is here again, but this time it's saying no dull yourself. Join other amazing women on Saturday, November 8th for a full day of fun and learning at Hangout with T8. Expert women's health talks on fibroid health and infertility, inspiring career and business sessions, poetry, good music and dance competitions, plus free gift speakers, ace journalist Adeswa Oyenokwe, entertainment lawyer Oluyemisi Falayi, specialist obstetrician Dr. Olabisi Olarewaju, executive secretary DSVA Titilola Vivo Adeniyi, and many more. Saturday, November 8th from 1 p.m. to 6 p.m. Venue, Unilag Multipurpose Hall, Akoka, Lagos. This event is totally free to attend. To attend or partner, call 0802-411-8735. The men are planning to gate crash. This event is proudly supported by WFM 91.7 FM, official media partner.
See, everybody with him own wahala. Every day comes with its own version of challenges, and you have to be ready to face them, because only then can you move on to the next. That's why I never miss my breakfast. Scratch that! My peak breakfast with the nutrients and energy I need to face each day, one challenge at a time.
Every day is a income, good day. In employment or in business, once your tax is computed, you take away all your reliefs. Some reliefs may include those who have a National Housing Fund contribution, some have National Health Insurance contribution, some have pension contribution, some have life assurance. All these are allowed to be deducted from the income you make. And after the deduction, if your income is not more than 800,000, if your taxable income is not more than 800,000, you pay tax at 0%. So probably your salary may be around the neighborhood of 1.3 million by the time you take away all these deductions. And your tax is not more than the income that is remaining is not more than 800,000, you pay tax at 0%. Also, now the tax rates have changed from what it used to be. Now we are at 0%, then going up to 25%. By the time you compute taxes today, many low-income earners will pay less tax, and we pay less tax. And what I mean by that, so if anyone's salary, practicality now, if anyone's salary is less than 15 million naira, such person will be paying lower taxes. 15 million or almost 20 million, you will be paying lower taxes. Let me say 15 million because I've done that calculation. Then if it is the neighborhood of up to 20 million, you may be paying what you are paying now. It did not change. Then for those whose income goes as far as much as 50 million, they may pay an extra 1%, 50 million. So the law, the government is looking at it that those paying 50, who have income of 50 million, they are the top echelon, and which we believe that we may not be more than 10% of our population. So if they have such, they can support, because tax is a redistribution of wealth. So they before today earn like 24%, but today it may be 1%. However, there are other incentives for them. Also, if such persons have loan on, they have interest, they are paying on loan, maybe for their properties or whatever that they live in, they are allowed to also take away those interests so that it will reduce the impact of tax on them. Then there's a relief that everyone can also claim, a 500,000 rent relief, or 20% of the rent you pay. So the 500,000 is to be deducted also from your money. So it's like government is dashing you 500,000. However, you need to provide evidence that you are actually paying rent and to claim this 500,000. So it could deduct. Now, people who are earning national minimum wage are also exempt from paying income tax. So when people are, for those who are earning national minimum wage, they are exempt from paying income tax. We also have something from value-added tax. VAT remains at the rate of 7.5%. It is not increased. And now all VAT people purchases, especially those doing business, can claim back those VAT. Also, there's a legal framework for e-invoicing that ensures that people report their transactions electronically. Then for those who may feel that they have overpaid VAT, the law says they can apply for refund and they will get that refund within 30 days. Before, if you apply for refund, the law says that the tax authority needs to come and audit your records to be sure that you are not lying. But now the law says don't bother to audit them, pay them their money first, then go back and audit them later. But the law says when they are found to have false claim, you will sanction them up to prosecute them, and they may be sent to prison. So that is if they false claim. That's to prevent fictitious claim. Now, small businesses that the law has called 100 million turnover and below are also not supposed to, they are not going to be collecting VAT. So it will help make them more competitive. People can buy from them because their goods may be cheaper because they are not adding VAT. So the law is also now making all these processes for VAT and all the business transactions to be more of electronic rather than to be paper-based. So even when you say how do small businesses, entrepreneurs that women lead, how will they affect them? When we say electronic does not mean big device or computer. It may be as small as your smartphone. The list of phone, which it may be as small as what we call the USSD code, *747# *this, and you put the figure how much you have sold there, and the record is concluded. Now, there's something we call economic development incentives that companies could apply for. It's given as a tax credit of 5% for 5 years, so people could relieve their taxes with this. So there are so many incentives that government is giving businesses so that business can be profitable and they can employ more. Exempt benefits, pensions, gratuities, retirement benefits are all exempted. Income, profits of educational institutions, religious bodies, charitable activities, they are all exempt from tax, except they go and be doing business, carrying on trade. Government don't want them to carry on trade or business so that they can leave trading for those who have been registered to do trading, and they will be paying taxes. So if a church is not expected to do business, an NGO is not expected to do business, they can carry on their charitable activity, receive loans, receive donation, receive grants, and it will not be taxed. Low-income workers who earn up to 100,000 monthly, we pay taxes. So if somebody is a minimum wage earner who earns 70,000, and the employer say, the economy no dey smile at all, so we want to add 25,000 or 30,000 to your money as wage award. Government says, don't tax that money. Though that money may be more, but don't tax it now. So these are some of the things. Now for VAT, we have VAT exempt over 13 classification of goods, goods purchased for humanitarian projects, baby products, locally manufactured sanitary products, public transportation. You can see all these things I'm calling are things women actually spend their money on, and all these things are exempted. Then we also have zero-rated goods, which are also zero-rated. This zero-rated means that even when someone pays VAT on it, means they should refund that money. They are not supposed to pay VAT on it, but even when they are paid. For exempted, anyone who suffers consequences of VAT may not get a refund because it's exempted. Therefore, zero rate, even in the course of producing that goods, if there's any VAT that was suffered, government say come and claim it. So, and it includes basic food item, whether rice, beans, curry, agbado, or whatever it is, they are now zero rate. All medical and pharmaceutical products and services are zero rate. So educational books and materials and tuition from nursery school to tertiary education, they are all zero rate. Fertilizers and medicines, including herbal products, are also zero rate. So the bigger picture, these reforms are not merely about taxes, they are about unleashing Nigeria's most unutilized economic assets. So in terms of economic growth, tax reforms unlock women's entrepreneurial potential, driving inclusive national development, providing social protection. It formalizes women's income, enables access to pension, insurance, and social safety nets. Also, it brings sustainability. Empowered women entrepreneurs create jobs, lift families, and strengthen communities long term. And it provides equity and dignity. Gender-sensitive tax policy bridges economic disparities and affirms women's role in nation building. And so, I'll say thank you for listening. The Nigerian Tax Reform Act 2025 represents a significant step towards creating a more equitable fiscal system. By addressing gender disparities and supporting women-led businesses, this reform have the potential to uplift millions of Nigerian women. So let's advocate for policies that recognize and empower women within a fair economy. Thank you very much. I await your questions.
Wow, thank you so much, Mr. Femi. You have done, in fact, you have given us a lot of information, because before now, the whole tax reform thing was looking very big, very bogus. Like, I want to understand all this one. How it take effect? Me where they collect small salary, me where they minimum wage. How far? If I want to go buy something, go how it go be. But I think this has actually made it easier. The way you just explained it made it easier for all of us to actually get to understand that this tax reforms is also gender friendly. It's there's something for women in it. So whether you're a business owner, homemaker, or a small petty trader, or whatever, no matter the thing what you they do, this one is really friendly. Is making everything look very easy and friendly. So yes, I think this is definitely a good one. Understanding it makes it even better. Even for myself, honestly, because sometimes when I reason all these tax notes, I'll say, okay, oh, government, so how far this baby grammar? Can we make it easier for all of us to understand? But hey, this is definitely good. So thank you so much for this insightful explanation. You've really helped us to demystify how the new tax reforms affect women, whether as business owners, employees, or homemakers, and even employers too. Have this is definitely something for you. And I like the fact where you said that for small businesses, the government is hoping that when you're able to do better, you will employ more people and you will make the economy better. And then we can now start saying, okay, let's see how far you have come. Then we'll talk about the tax. And I also like the aspect where you brought up the issue of plant the seed first, make it grow, make it not just grow, but make it bear fruit. After it bear fruit, then we will come sit down and talk about the tax. And that is definitely really interesting. So thank you so much, sir, for taking us through this in simple terms. So now we'll move to the Q&A. Let's get to have your questions. So we'll just take all the questions at once so that he's able to answer all of them. And we will definitely get through all of your questions this evening. So let's see how many questions we have so that we can just go through them. And then I guess we get to answer the questions. All right, for this particular one, I think this one now, for the first one we have, is there a major, will I say, is there anything that's been put in place to keep checking if companies have actually, succeeded in getting to the point where they can be taxed? Because us Nigerians, sometimes we can just keep telling people, no, I never reach you, I never reach, I never reach. So are there measures that have been put in place to keep checking on these companies to see that, well, you have reached the extent you have, you have fruits now, we can actually, go ahead and, tax you now that you have this, that you have gotten to a particular place, so yeah, this is definitely, that's one question. So let's go to another question so that we're able to just take all of them at the same time, so we don't leave any out of it. All right, another one here, another question that we have is about individual tax. So if we're saying that, okay, we're not taxing people who are below a certain amount, so is there also measure in place to check to see that, okay, this person is no longer below the mark of 100 million, is now more than this? And if we're talking about that, are we saying is per annum? So if we're saying 100 million or 150 million, are we saying that, okay, you're earning 100 million in a year, so before we know whether we can tax you, or it has to be monthly? So those are the two questions that we have now. All right, another one says that I live in the UK and I want to put some funds into catering investments. Do I pay tax on remittance when I transfer into my Nigerian account? This is coming from Shegun from London, UK. So those are the three questions we have. And then another one from Abike. From Mr. Lufemi, I hope you're getting all of the questions, so it's not like I'm rushing them.
I'm okay, I'm getting them.
Okay.
The first one you were asked about if the threshold for 100 million is a year or a month, and if
Yes.
how do we ensure that people who have exceeded this threshold can pay taxes, whether individual or companies? So I guess that's your first three questions. Then you ask tax on remittance, fourth one.
Yeah, so let me just add this one, and then since you prefer to answer all of them at the same time. So this one is from Abike from Abeokuta. She says, if I get monthly allowance of 250,000 for my children and husband, do I have to pay tax? So those are the questions that we have now. So you can just go ahead and see. If we have more time, then we can take some more.
Okay, thank you. The first one you asked, how do we ensure that people who are above the threshold, when they get above it, how do we ensure that they start paying taxes? Okay, like I said we are modernizing We are no longer trying to come check your books and the rest. So that's why we are going to be working with records. With records, we're syncing with banks, we're syncing with government agencies. So we're syncing with, and we said we are introducing something called e-invoicing. So every transaction you do, you issue what we call the e-invoice. And from there, government can see all transactions you're doing. However, the law says that you yourself should compute your taxes, declare your income, compute your tax, and pay. So where you do not do so, that's when government probably will now use all this information within them that they have to now put it to you that you have made this and you have not paid. And at that time, there will be sanctions for not paying. So it won't be. So the law, what we operate in Nigeria is self-assessment. So everyone is expected to self-assess themselves and pay. So nobody chases after you for taxes. It's also the same thing for individual. If you there's a portion of the law that mandate banks to report transactions in bank account on monthly basis. So for an individual, when those bank balance is about 25 million in a month, and for a company, I think it's about 100 million or 150 million or thereabouts. Yes. So that is so it also helps government to monitor and not to take your money. So people don't think once government see your money in your bank, no. Government also do not have power to take your money from your bank. So there's been a lot of rumors say government is going to be debiting people's bank account. No, government cannot debit your bank account. There's a procedure for every issue. There's a power called the power of substitution, and how it is being exercised is when the taxpayer have refused to compute their tax and pay. What government does is, if the government have any information that that taxpayer is owing, government invites the taxpayer, sends this, compute the tax and send to the taxpayer. The taxpayer must agree that truly I am owing this tax. And government gives you time to pay. You do not pay. Government goes to court and say, oh, this man has agreed. Please look at the evidence that he has agreed. Then I can confirm that he has money in his bank account. Can you please give us what we call substitution, a garnishee order, so that we can substitute his bank for him? Now, also government will still not take that money. Government will only use that order to show the bank, this person is owing us. What can you do to help us ensure that this person pays? So what bank does the most time is to block the account, so that that person will come, will not use all the remote way of withdrawing money to withdraw it. It will now walk into the bank and say, see, I cannot access my account. Then they will now tell him that, oh, you have agreed to government that you are owing certain amount, and government say you should pay. So please go to government and clarify and agree with them how you're going to pay, and let government now advise us. And it doesn't come like directly. It takes a long time until that person, and like I said, you must agree. Or when they say silent means agreements, there is a 30 days period for people to agree. Where you refuse to even respond within that 30 days, government can go to court. But there are procedures. It's not that simple. So government, it's not that simple just to go to your bank. No. So those are what we call power of substitution. Now, back to your question. The one that is remaining is the issue of remittance. No, tax is not paid on remittance. That money you want to send in from abroad, please send it in. It will help to grow our economy, whether the exchange difference, it will help to that business you want to set up too. It will help to also grow our economy. You provide employment until that business makes an income, and that is when it is chargeable to tax, not the money. The money you bring is your capital. That is the seed that government doesn't want to tax until that seed germinates and make fruit.
Okay. All right, thank you very much. But how about the one of allowance? Because Abike said
no. So allowances are not chargeable because those money were sent to you for a particular purpose. And as you are receiving it in your account, we expect that you also use it to do that which you is meant to do. And also for people doing business too, if your business partners are sending you money, some builders had asked me, oh, I'm building for somebody and they are sending me money to buy materials for them and do the building. It's also not chargeable to tax, except there is a portion of it that constitutes your own service. So that means that's your own economic activity, that's your own income. Is that your own income that will be chargeable to tax, not the entire money?
Okay. All right. So earlier you mentioned about self-assessment. Now, how do I do this self-assessment? Do I need to engage the service of an accountant? This is coming from Ikechi from Abuja.
So,
go ahead. Go ahead.
If you are an individual, you can learn how to do it yourself. You can learn it. However, of course, that is why some people went to school, so that they can also make money. For an individual, you can learn how to do it if you know how to do it. The law allows you to do it yourself. The law also allows you to look for a brother, a friend who know how to do it to help you. But the law now says that where you are going to now employ the service of a professional, please employ the service of a qualified person. So you can get, if you don't want to bother yourself, maybe the money you have made is so much, so you can share it by employing an accountant.
Okay. All right. So this is from Farouk. He is joining us on the Google Meet. He says that I have a farm, and my question is the inputs from my farm, are they taxable? That is feed, DOC, transports, and so on. And then he said, secondly, I have an NGO. I want to know if all of our activities are non-taxable or some of it. Thirdly, where those LG tax come in? And finally, what is the tax paid if one is a trainer? Do I go over the question again, or you?
It's okay. Let me quickly address them. You know, I say I have to get off here. So, if you are LG taxes, so there are LG taxes: street naming, burial ground, off liquor taxes. We have slaughter slabs, motor streets, all this AMAC. You see all this street. So there are traffic. There are some little taxes on within the local government that local government are allowed to collect. They are called one offload and loading, offloading and loading taxes within the local area. Just so those are the ones that local government collects. Now, inputs in your farm are not taxable until you make income. So if you sell them and you make income as a farmer, yes, you may be taxable, but you must exceed that threshold of 100 million before anybody is taxing you as a company. So another thing I will also advise is that most of the things we are saying now, we are talking mostly about corporate taxes, which is companies' income tax most of the time. So it's also easy to formalize. Government is saying formalize because it's only when you formalize, government can see you. Many women businesses like informal economy, informal sector. So but government is saying we want to encourage you to formalize so we can know you. Because for those informal economy, government may not know them. It's difficult to know that even people are doing business in that environment, and it's difficult to target them because we have jurisdictions of tax collection. The state and the local government also have some jurisdiction. So for them to, so the state and local government are expected to also tax those smaller businesses. And of course, if you are dealing with federal government or if you are trying to come up, you register a company. It's easier for you, and you get a lot of incentives as a company. So it's easier to incorporate your business and enjoy a lot of incentives. So I think there's a last question I've not attended to.
Yes. Let me just take this last two and then we'll let you go because I know you have a flight to catch. This one is coming from Shegun, and Shegun is the same person that asked the question of remittance earlier, saying that he wants to put some funds into catering. How do I pay remittance? So he's now coming down to say that, am I allowed to retrieve my initial investment? Supposing I took a loan for my initial investment. This is his question, added question to that. And then Oyetayo Otukoya says, what about proceeds from inheritance? So he's asking, is that also taxable? So I think this is the last two questions we'll take so that we'll let you go for today.
Okay. So if you take a loan, what you use in paying back loans mostly is interest. You pay loan interest. So by the time you're paying those interests are allowed, they are tax deductible. So you're allowed to deduct it. So you don't pay tax on your loan. However, if you use that loan to do business, and that business is booming, you are making income, and before you make calculate your profit, you must take away your loan repayment. So if you have taken your loan repayment and you still have more profit, more beyond even that 100 million annual turnover, you start paying taxes. But that is not on your loan. Government allows you to take away your interest. It's not taxable. The second question now, I'm trying to remember. Okay, inheritance. Inheritance are not going to be taxed until those inheritance have been shared and they belong to somebody else. So something is inheritance when someone's father passes on, maybe someone's father passes on, and he has estates. Those estates, when it's still being kept before being shared, that is when it is an inheritance. Once it is shared and somebody have received it, by mere receiving does not constitute a taxable activity until that thing you have received now start making income. Maybe you have received money, you have received like 10 million naira in your bank account. That 10 million will not be taxed. When that 10 million starts yielding interest, that is when it will be taxed. If you move that 10 million, you use it to go and do business. It's no longer inheritance. It has now become money in your hands. That is when it is taxed. But the fact of receiving an inheritance, it is not taxable.
Okay.
So, thank you very much.
All right, Mr. Fem, just before you go, sorry, this one I just have to squeeze it in. Please, I'm sure it will not take time. I just need to squeeze it in. So this is coming from Angela. Angela Agowike, I hope I got that right, 756 on YouTube. She says, great opportunity for learning. When you move money from one company's current account to same company savings account for a defined purpose, does that amount moved get taxed at both ends at all once? So that's the final one we take, I promise.
Okay, if you move money from one company even to another company until those money start yielding income, profits, gains, that is when they are taxed. So like I said, we practice what we call self-assessment. This taxing is on the strength of your defense, of your reporting. So when you report and you are reported accurately, I move money from year to year so that I can, for the convenience of payment. Oh, it's better to pay from my savings account. It's better to pay from my current account. It is okay, except when you are moving money from one company to another company. It will be seen as if those two companies are doing businesses within or among themselves, and so they need to report the income that comes out from there. That's the only time. But if it's same company, no problem. Nobody looks at tax. Even from different companies, until we need to, what government will be looking for is that where is the profit? Where is the income when you move from one person to the other? So until we see those income and profits, that's when tax arises.
Okay, thank you so much. I think we'll just let you go now because you have actually told us a lot. A very huge thank you to you, Mr. Michael Olorinde, for taking out time to guide us through the 2025 tax reforms and what it means for Nigerian women. And I'm sure that we'll have learned and we'll take this back home. Most importantly, to share this information. Thank you very much, sir, for making out time to be with us this evening.
You're welcome. Thank you very much, and now have a nice day.
And you have a safe flight, sir. Thank you. All right, so well, that's it. We have to let